Here in this video, we're going to break down the charts on Tesla stock. Are we going higher or lower in this upcoming week? We're also going to look at the data coming out for our markets, the option activity and option positioning in Tesla stock. We're going to take a look at the total short position in Tesla. Do some shorts start to cover? Well, that could be a big question to be had in this upcoming week. In all, we're going over a price prediction for Tesla stock. I hope you are ready. If you are a Tesla stock investor, hit that like button, consider subscribing to the channel, consider sharing this video with a buddy, a friend, a pal, someone that you think needs to hear this video. Let's go ahead and get started. So we're actually not going to start with the charts. First things first, Tesla stock, I think the chart really speaks volumes here and is one of the most important or most notable things to speak of heading into the new week. But we're actually going to start with the option activity that we seen last week and option positioning for this week. The markets really care about four things right now, but three things specifically: inflation, the economy, and the Fed. Last week, we got answers to all three of those things, and they all came in really the best possible outcome. Inflation is falling faster than expected, although we did have an increase last week in your month-over-month core CPI. A lot of people pointed to that as good news, especially on your headline. So that was overall a net positive last week. The Fed was obviously a net positive on Wednesday. The Fed basically opened up the floodgates for capital to return into stocks. Not any old stock, I would argue. If we do truly have a soft landing and the markets are correct in now pricing in 6 rate cuts, well, that means you probably want to own interest rate sensitive names, but you also want to own quality. And if you are a big money investor that is managing clients' money, one of the best places to put your money, my opinion, the best place to put your money would be in Tesla, because there is a certain degree of safety in Tesla. It's not a smaller mid-cap stock that is very susceptible to going bankrupt if things go wrong. Even if things went very wrong for Tesla, they would have to go very wrong for a very long time for Tesla to go bankrupt. It's basically as close to a fact as you can say a fact in our markets. Tesla's not going bankrupt. Okay. Tesla's very interest rate sensitive. Tesla has a lot of upside from here. There's so many different reasons. Tesla also has a pretty high market weighting in the S&P 500 relative to other names out there. Tesla's a clear winner in 2024. Not to mention, the business of Tesla was really suffering in 2022, the end of 2022, really. And 2023, as interest rates just continued to climb, Tesla was forced to give up margins to be able to, deliver on volumes. If Teslas were still $65,000 for the Model Y, there would be a lot less Teslas being sold every quarter. Sure, margins would be better, but the overall numbers would be smaller. You get the idea here. Just fundamentally well-rounded this week, next week, the week after that. The narrative will stay the same until it does not anymore. You probably want to own Tesla. Money coming back into our markets is probably going into Tesla. So just remember this. Over the next coming weeks, next coming months, there is going to be an upside bias to Tesla until one thing happens. If we start to go into a recession, if we start to get bad economic data, the tide will turn for Tesla and Tesla will start to perform poorly. As well as the broader markets, but interest rate sensitive names, susceptible names to the economy would do worse. I don't know when that's going to happen. I don't know. This week, we're going to get some data that could definitely tell us more on the economy. I'm not in the camp of a recession, so my personal bias tells me Tesla's going to do just fine. We're going to avoid a recession, and Tesla stock's making new all-time highs next year. But I'm obviously biased. I think it's very unpolitically motivated to see a recession in 2024. The government's going to do whatever they have to do to help the economy avoid a recession. Over the past, 20, 30, 40 years now, we've never seen a recession just come about by itself. Even 08, 09, what started that problem, that recession? The housing crisis. If there was no housing crisis, we wouldn't have likely went into a recession. Same thing with the dot-com bubble. What happened? Well, dot-com stocks got destroyed. A lot of average citizens started buying stocks. They got destroyed. They lost all of their money in most cases. What happened? You've seen a recession, right? 2020, that was the Rona. So most of you guys during your investment lifetime have never seen a recession happen without a catalyst. And I think if the largest banking crisis we've ever seen in history back in March on a dollar basis didn't cause a recession, I don't know if anything will. Okay, there's sure bad things you can point to. The yield curve is inverted. Delinquency rates on auto loans. People are just struggling out there. That's for sure. But I just don't see a technical government recession coming. If anything, you can make the argument that the average folk in America, at least I can speak for America, has felt like they've been in a recession for the past 2 years. That maybe things get better in 2024 if disinflation does continue. But I think this is important to know all of these things, to truly know all of these things, to at least understand them, even if you don't agree with me. All of what I just said is factual. And these are things that will help Tesla stock go higher over the next coming months. But again, if we go into a recession or start to look like we're going into a recession, even if we avoid one, stocks will fall. And Tesla would fall more than the broader markets. Taking a look at the option activity over the past week, you had 6,168 orders totaling $11.09 billion with a positive order value of 40%. So there was more negative money, bearish money, heading into Tesla options last week in its entirety than bullish dollars. Guys, options are used as a hedge most of the time. It's not a speculative trading instrument. When you're looking at, option positions in the billions, most of that's going to be hedges, or a good chunk of that is going to be downside hedges to hedge a larger long position. Considering all of the catalysts we had last week, including the Fed, including all the economic data, right? Inflation data. It's no surprise. I think a better indicator of maybe where the sentiment actually was last week is on Friday. On Friday, you had a positive order value of 64%. That's pretty substantial. That's getting into very bullish territory with dollar amounts of $1.56 billion and about 1,200 orders total. So given all of the catalysts we've seen over the past week, Tesla stock was up 1% on Friday with very bullish option activity. The volume was about 65% to the call side and 35% to the put side as well. So almost 2 times as many calls were bought compared to puts. I think that's also a strong sign to start off this next new week. Option activity for the next week, you do have open interest at 52.36%, open interest on the put side at 47.64%. Now, as you guys know, I always like to look at the bubble chart because it gives you a visual reference of where the most activity is for any given strike. And it's 9 times out of 10, or maybe 19 times out of 20, you're seeing way more calls than puts. That continues to be the case. Now, here on this left side column, you can see this is the open interest. So the higher these bubbles are, the more contracts are held in people's brokerage accounts, right? The larger the circle is just showing you, how many, right? The volume, essentially. Now, if you take a look, you do have one put that's up here, and you do have open interest of 23,000 at the 240 put. I think, again, a lot of what you've seen last week was hedging on Tesla stock in the options world. So it's not surprising, at least one closer to the money put is way up here with the calls. Now, the 250 call has the highest amount of open interest. That is at 24,081. That is at the 250 call. You did see volume on Friday of about 44,000. So we'll see coming tomorrow morning where the actual numbers are. Some of that volume likely made its way to open interest as some people were taking, again, those bullish bets on Friday. The 260 call also very impressive with open interest of 21,000 and volume of 68,000 on Friday alone. Now, the 255 call had volume of 52,000, open interest of 11,000. The 250 call had volume of 48,000. The 270 call had volume of 43,000. The open interest on these is very low, in between 9 and 11,000. So we'll see if some of this elevated volume does actually make its way to open interest. Volume, think about it like this, can be day traders, right? Just getting in, getting out, not holding contracts. The open interest is when someone buys a trade and they hold it to the next day or to the next week, whatever your time frame is. So if you do see people that bought options on Friday that held them, these presumably, to the call side is what we're looking at here. Coming tomorrow, if the open interest does spike, well, that can lead to a potential gamma squeeze in Tesla stock. On Friday, you had total volume of 3.08 million contracts on the entire Tesla option chain that traded hands. This is versus open interest of 7.91 million. So there was a lot of aggressive position taking on Friday. You almost seen half of the amount of open interest total for the next 2 years in just volume on Friday. So there's going to be a lot of new position taking, and that could help, again, fuel what I think is going to be an upside move in Tesla stock. But maybe some parts of this week might not be as bullish. Believe it or not, I'm not delusional to the fact that the markets have rallied aggressively relatively quickly. If you look at the AI Investor Sentiment Survey, the bulls are at 51.3%. This is a one-year high. Neutral investors at 29.4%, which is, kind of low, relatively speaking. Historical average is 31.5%. I should point out historical average for the bulls is 37.5%. So you're pretty healthy above the historical average for bulls. The historical average for bears is 31%. You are currently at 19.3%. So it's not like stocks are beaten down right now. Stocks have rallied. Indexes are at all-time highs. I'm not a fan of the indexes. I think the indexes could fall in this upcoming week. Because why do you want to own Apple or Microsoft or other heavily weighted names to the indexes if rates are really going lower and we avoid a recession? You don't. That's the simple answer. Don't look too far into it. You don't want to. They don't benefit from rates going lower. They don't have the kind of growth that Tesla does, that small and mid-cap stocks do. So it could start to happen where the indexes roll over and Tesla stock does very well. Y'all already seen that on Friday. I mean, if you look at the broader indexes, the S&P was actually down a little bit on Friday, and Tesla was up 1%. The Russell 2000 even was down almost 1%, and Tesla was up 1%. You're already seeing the outperformance of Tesla. Bonds did also fall big time last week on your 10-year treasury from about 4.24% down to 3.91%. That's equivalent to a little bit over one rate cut from the Fed in terms of basis points. He dropped about 35 basis points last week alone. That is taking some of the restriction off of the economy. 10-year treasury yields directly correlate to auto loans, to home loans, to credit for consumers. So this is seen as good news, something we definitely want to watch for in the week ahead. Let's look at the economic calendar because your major events in our markets affect Tesla stock. They affect your money, they affect your portfolio. Now, throughout this week, on Monday included, you're going to get some bond auctions, the 3-month, the 6-month. They don't really matter. The 10-year bond auctions are the ones the markets really pay attention to. That's what can move the markets up or down in a big way. So nothing really happens on Monday. Monday's kind of a chill day or a burn one day, if you guys are familiar with that term. Tuesday, you will get the Canadian inflation rate year over year. That's not going to mean too much unless you see a big pop or a big drop. Building permits preliminary for November come out at 8:30 in the morning on Tuesday. If you see more building permits, this is going to be seen as good news. Less permits are going to be seen as bad news because then you're probably going to have more housing inflation for longer. The more permits you get, the more building you get, the less housing inflation you will see. Housing starts for November expected at 1.36 million. Housing starts month over month expected to be down about 1%, which, we'll have to see. New York Fed Treasury purchases 2.25 to 4.5 years expected around 80 million. Foreign bond investment, net long-term TIC flows. That data could be interesting, but it's definitely not going to move the markets. Now, Wednesday, you're going to get the inflation rate out of the UK. That's also, again, not going to move the markets unless you see a big, up move or down move. You will get consumer confidence coming out at 10 o'clock in the morning, existing home sales month over month and year over year. Lots of oil data as well. Really not expecting that to do much. You do have a 20-year bond auction. The 20-year bond auctions have been pretty stable, but considering what we heard from the Fed last week, bond yields might fall sharply coming Wednesday off of that bond auction. On Thursday, you are going to get the GDP growth rate quarter over quarter. Final numbers for Q3, you're expecting 5.2%. So, if that number comes in way lower, that's going to be a problem. Remember, right now it's all about avoiding a recession. So if you start to look like you might be heading into a recession or a deeper slowdown is coming, it's going to be bad news. You want to see 5.2% or maybe even higher than that. That would be good news. Now, you're also going to get at 8:30 in the morning on Thursday, Philadelphia Fed Manufacturing Index, continuing jobless claims, core PC prices, lots of final data for Q3, Philly Fed CapEx Index, Philly Fed employment, Philly Fed new orders, Philly Fed prices paid, CB Lending Index, real consumer spending, Kansas Fed Composite, Kansas Fed Manufacturing Index. You get the idea. Lots of they call it soft data. It's not like the government jobs, report. It's not like the unemployment rate, but it is data from certain districts that can tell you a little bit more information. So Thursday's going to be the second most important day. For sure, Friday's the big day. Friday's when you get the hard data. Core PC price index month over month for November expected at 0.2%. If that comes in at 0.1%, oh boy, our stock's going to rally on Friday. Durable goods orders expected at 2% positive. That would be great news. Higher the better. Personal income month over month expected at 0.4%. Honestly, it wouldn't be bad to see some positive gains to real income, right? Because it's been eaten away by inflation over the past 2 years. We just went positive on personal income, real income over the last 2 years, just this last month. So maybe that wouldn't be a bad thing to see that as 0.4%. Last month was 0.2%, definitely something to watch. A big one is going to be personal spending. So personal spending in general tends to be about 70% of GDP, depending quarter by quarter. Obviously it can vary. About 70% though tends to be the average. If personal spending comes in at 0.3% as expected, that is 3.6% year over year on a 12-month annualized basis. That would be good news. The higher, the better here. Again, because then you avoid a recession, and inflation is still continuing to fall. It's not like, good economic data has caused inflation to ramp up. We just seen over 5% GDP for Q3. Inflation did nothing. Inflation continued to fall. So you definitely want to see some good data here. So I actually think naturally that the beginning of the week could see a little bit of softness, and the end of the week could be stronger, especially on Friday. I do think the data is going to come in good. I'm not expecting some kind of slowdown in the economy or ramp up in PCE inflation, none of that. So I do think Friday is going to be more confirmation on why you want to own interest rate sensitive names like a Tesla. But don't be surprised if the beginning of the week is a little chiller, maybe a little bit more to the downside, or maybe even trading sideways or slightly higher. I'm really not expecting anything too crazy until at least Wednesday, more than likely Thursday or Friday. Now, Tesla stock on a technical basis, oh boy. I mean, come on now. What a sexy looking chart. If a chart could really be like sexy, it would be this chart, because if you just draw a simple trend line, you were getting rejected at this trend line over and over again, 4 times in a row. On the fifth time he did it. He broke above this line. And what you've seen, that was on Thursday. That was a big day. That was a 5% day for Tesla. Huge outperformance. Microsoft was down over 2.5% on Thursday. And then Friday, Tesla was up 1%. So you are trading at the highest level you have traded at since October 18th, and you're above this line. Typically when that happens, you can get quite the breakout to the upside. Now, I think Friday is going to be a big day. I think Friday could be another 5% or so day for Tesla. So I think Tesla is going to break out into about the 265 range. Could it go higher than that? Obviously, depending on the news that comes out, whether it's good or bad, you could break into the 270s coming this week. But I think between 265 and 270 looks like a reasonable level for me. 270 is going to be on the higher end. I think 265 looks reasonable because, I mean, you're at $253 in all reality. Saying Tesla could hit 265 is saying Tesla could rally 5% this week. Let's say the beginning of the week is kind of sideways, you're up, you're down, and then you could do 5% on Friday, right? And I am expecting a strong day on Friday because I think the data is going to come in better than expected on all different areas, just based on what I'm seeing out there, based on some of the data points that I'm looking at heading into that report. So there is that. Now the RSI is at 63.52. As you guys know, anything above really 55, I consider to be pretty bullish, pretty good. Once you get over 70, you're technically on the oversold side. Another reason why I think Tesla could really trade sideways for the next, 2 or 3 days or so. And that would actually be a good thing for the bulls. The MACD is also pretty dang positive. MACD line, this yellow line, is at 2.54. The signal line at 2.67. So the yellow line is above the blue line. That is also great. Now, for any downside, I mean, I'm really not expecting much downside. But if you do get downside, you're probably going to find a lot of support at this line, just like you did find this as resistance. You're probably going to find a lot of support here as well. And that's going to put Tesla stock right at about $246 or so. But I mean, I'm not expecting that. Is it a possibility? Sure. I'm not going to say it's not. Let me know what you guys think about this down below in the comment section. What is your price prediction for Tesla stock in this upcoming week? Thank you for watching. Enjoy the rest of your day. If you guys want to come trade with us live in real time, link down below in the description of this video as well. That's a great place to be. We have hit some monstrous trades. I mean, it's almost like it's lucky, but then again, we're doing this week in and week out. So yeah, just come join us if you guys are interested in trading, growing your knowledge, and potentially making a bunch of money. Now, obviously, guarantees. There is no guarantee that you will make money. We're trading options mostly over there, and options can be risky and really comes down to a lot of discipline to be able to trade them in the first place. So obviously, contact a financial advisor if you need to. The typical disclaimer, I'm not one, so I'm not going to give you personalized financial advice, but definitely come trade with us if you would like to. Nonetheless, my name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.